Hi YouTube, it's Janelle here. Before you go file your own taxes, you need to know what a deduction is. A deduction is an amount of money that you get to subtract or deduct from your taxable income so that you can pay less money in taxes. For example, if your income is $45,000 from last year and you get a deduction of $5,000, then you only have to pay taxes on $40,000 from your income. So there's two ways that you can figure out how much you're going to deduct on your taxes. The first way is to take a standard deduction. Now, this is the easiest way to go because it requires literally no thinking or calculations at all. The amount is preset by the IRS and you can find it online anywhere. So here's a chart that will show you how much you can deduct based on your filing status. So for somebody like me, I'm single, not married, and since I don't have kids or any other dependents that rely on my income, I can't file as a head of household. So I would file as an individual taxpayer. So if you look at the chart, the standard deduction for somebody like me is $6,300. Now, this amount is going to change from year to year, so just note that I'm specifically talking about the tax year 2016. The second option is to itemize your deductions. So this means that you're literally going to list out each item that you want to deduct and how much you paid for it on a special form that's called a Schedule A. But the catch here is that these items have to fit into very specific categories that were determined by the IRS. So once you finish listing out all those items, you can add it up and that will tell you how much you can deduct from your taxes. So you can see that this way will take you way longer than if you were to just accept that standard deduction. So if you spent a lot of money in these categories or one or more of these categories, then it might make sense for you to consider itemizing your deductions. But if you really didn't spend any money or spent very little money here, then it makes more sense for you to go with the standard deduction because that's probably going to be the larger deduction that you'll be able to get. Now, I know a lot of like millennials and other people out there are probably thinking, well, what about student loan interest? I pay a lot of interest on that. And yes, there is a student loan interest deduction that you can take, but you can claim that even if you don't itemize your deduction on your taxes. So you don't have to use a Schedule A form to do that. Even if you decide to take the standard deduction, you can still get that student loan interest deduction. So it's not going to really count for these categories. It's not something that you need to think about when you're deciding between the standard deduction and itemizing. When you're filing your taxes, you have to choose between these two options. So the best thing that you should do is choose the one that lets you deduct the most from your taxable income. That way, the amount of taxes that you pay in the end will be as low as possible. You can't choose the standard deduction at all if you're married and filing separately and your spouse already chose to itemize. Then in that case, you have to itemize. But for most people out there, you do have the option to choose between these two. I'm going to be posting about the different options for e-filing. So if you're somebody who's planning to file your own taxes online, there's a lot of different websites that offer pretty great services. So I'm going to be putting up the ones that I really recommend for you to check out and talking about which ones make more sense for people in certain situations. Like this video, give it a thumbs up, share it with somebody that you think might find it helpful, subscribe to my channel if you haven't subscribed already, and if you have any additional questions, you can always reach out to me at MissBeHelpful@gmail.com. Till next time, peace.